The alternative minimum tax, also called AMT, is something most taxpayers never even heard about it. And that's the problem. For decades, it has been like a trapdoor hidden inside the tax code. You think you are doing everything right, then suddenly your tax software tells you, sorry, you actually owe thousands more. And even many tax pros just shrug and say, well, that's how the program calculated it. But here's why you should care. Under the big beautiful tax bill that was signed in July 2025, the AMT rules are shifting in a way that could save middle and upper middle income families thousands of dollars in 2025. And if you ignore it, you could miss the chance to legally lower your taxes, or worse, get caught by surprise in 2026 when the rule tighten again. So stick with me, I will explain what AMT really is, how the new law changed the game, and what smart taxpayers can do this year and next to stay ahead. Hi, I'm Mia. I am a tax professional with more than 15 years of experience. Today I'm here to show you some information in plain English. I'm not trying to say any tax jargon, but knowing that this is not tax advice. So this video is for education only, so you understand what's happening and can make better decisions with your own tax professional. So what exactly is the alternative minimum tax? Imagine filing your tax return twice. The first time you use the regular rules. The second time you use the AMT rules, which ignore certain deductions and credits. So at the end, you compare the two, whichever number is higher, that's what you pay. So why does this exist, right? Originally, it was aimed at millionaires who use loopholes to pay almost nothing. But over time, the AMT started sweeping up regular families, like engineers, teachers, small business owners, especially those living in high tax states. That's why so many people were blindsided. They never thought they would be in the category it was designed for. Before the new law, the exemption amounts were high enough that AMT didn't hit for many people. But there was always this cloud hanging over taxpayers with stock options or high state taxes. By 2025, the AMT exemption was about $88,000 for a single filer and $137,000 for a married couple, with phase out starting around $626,000 and $1.25 million. Better than it used to be, but not exactly simple. So here's the update you need to know. The big beautiful tax bill that was signed on July 4, 2025 make the higher exemption amount permanent. That means stability, right? So no more guessing whether Congress will extend them, but there's a catch for it. So starting in 2026, the threshold where the exemption starts fade out. Okay, let's connect the dots. Why should an everyday taxpayer care? So if you have an incentive stock option or IOS, you might have more breathing room in 2025 to exercise those shares without triggering AMT. In 2026, that runway shrinks. If you live in a high tax state, AMT wiped out the deduction for state and local taxes. But the new law temporarily raised the SOAP cap for regular tax to $40,000 from 2025 to 2029. That means you could actually get some value back in 2025 as long as you're not in AMT. If you are on the borderline, family that are earning $200,000 to $250,000 with kids, and property taxes might have brushed against AMT in past years, in 2025 you might avoid it completely. In 2026, the new phase-out mechanic could pull you back in. So the bottom line is this: the AMT matters because it decides whether your deductions are real or disappear. That's money you either keep or lose. So how do you use this to your advantage? Number one, you want to plan your ISO exercise option. So if you've been holding incentive stock option, 2025 could be the best year to exercise more without penalty. Or spread them carefully, don't dump all at once. Number two, use the bigger SALT cap. If you're not in AMT, that $40,000 cap for 2025 to 2029 could let you deduct more state and property taxes. Remember, before that it was only 10K, right? Now it's 40K, so like 4 times more. You want to time your payment so you are not washing deduction in an AMT year. The third tip is to reproject every single year. Never assume last year's result will repeat. So 2025 and 2026 look very different under the law. Use software or professional to run both regular tax and AMT. Tip number 4, charitable giving still works even in AMT. So charitable contribution keep their values. If you are close to the AMT line, bunching deductions in donations can help maximize your benefit. Tip number 5, medical expenses matter. Certain medical costs will reduce AMT. If you have big expenses, timing them in AMT year can soften the blow. Tip number 6, check withholding. If you might hit AMT, adjust withholding to avoid a surprise balance due. So IRS.gov has a paycheck checkup tool that can help you with that. Here are some extra that I don't talk about much. Trust distribution. Trust and estates can also face AMT. If you are expecting a large distribution, plan whether 2025 or 2026 give you a better tax outcome. Rental property depreciation. AMT has different depreciation rules. Landlords who avoid AMT in 2025 may actually benefit more from their regular depreciation schedules. College planning. If you are making big 529 withdrawals or paying tuitions, align it with a year you're not in AMT, so you get the maximum deduction or credit. If you like tools that make this easier, check out my shop at prodeductions.etsy.com. I have built calculators and spreadsheets that track deduction and even show you potential AMT exposure. And if you want deeper training on tax strategy, visit assetwiseinstitute.com. Both are designed to make complicated rules simple and make them practical for use life. I have a quick question for you. Have you or someone you know ever been surprised by the AMT? Type yes or no in the comment. I would love to see how many families this new law actually helped. Thanks for watching. If this was helpful, hit the subscribe, like, and share. It's helped more people avoid expensive mistakes. The big beautiful tax bill changed it in plain English, so stay tuned. And remember, the links for calculators and training are in the description below. I'm Mia, and I will see you in the next video. Mahalo!